What is going on YouTube? It's Brendan from Market Makers. Look at this, clean shaven by request. So many of you wanted to see this, what you called a beautiful face. Just kidding. Nobody requested it. I was getting so much sun on the ranch that I decided to shave so I don't have this bright white chin come later in the summer. But guys, I have a big video for you today. I'm going to knowledge dump with Michael Darda. I'm going to play a long clip from him. It's going to cover all of the base case of why I'm still bearish. People don't understand why my macro is very bearish, even though I'm looking at the micro as well, trading longs and shorts in the S&P and Bitcoin primarily, and some FX trades when I see them. But I want to explain all that in this video. We're going to go through all the assets. I wanted to kick this off. I wanted to kick this off with the S&P. I showed you guys this chart last Monday. Notice my outer channel. Here's the outer channel going back to the low. You see the outer channel, and I colored my inner channel yellow so you could see this easier, right? So on Friday, I've had this now for over a week. On Friday, JP Morgan chief technical strategist, JP Morgan head of technical strategy. Let me spit it out correctly. Went on CNBC. Lee, show the guy's face and then show the chart. Look at his chart. It's exactly the same, the channel and the inner channel. Now, this isn't me saying that he took my TA, which, maybe he watches Market Makers. I have a small YouTube channel, but maybe maybe somebody screenshotted it and forwarded it to him. He's like, "Oh, let me draw that." But the point of pointing that out was quite simply to show you that the big money, the chief strategists, are also looking at these exact same levels, okay? Because how do you make money trading? You trade with the big money. So 4,600, if you watch the full interview, maybe I'll show it next video. I'll show some of his interview. 4,600 is his key level as well. Obviously, we're at 4,589. Channel within a channel, that's because you have a cluster up here now, hitting the top of the channel. So we're going to come back to this, but let's start in the beginning. In the beginning, you have VIX, okay? VIX is still suppressed, 13.88. Lots of complacency in the market. And of course, we have the August 14th pivot date coming up. We got this big pivot date coming up. I want to see if that affects the VIX at all. DXY is basically flat, holding above 101.5. It's at 101.6. Immediate resistance above is 102. Spot 0 and 102 spot 7. Okay, that's your 618 up here. If the DXY decides to get a little bit more bullish, what does this mean for the euro dollar? Euro dollar after ECB, after the Fed, you rebounded slightly. You're holding the 618 for support at 1 spot 100. Price is at 1 spot 0224. Immediate resistance is 1 spot 106 and 1 spot 121. So watching this structure here, obviously you could print a macro double top here, or you could keep this higher low trend going that you have here and get more bullish on the euro dollar. So it's something we're going to watch since I got stopped out of my excellent short on this nice 2.5% decline. Guys, all these assets you can trade on SimpleFX if you want to support the channel. Highly suggest you check them out. There is no spot there. It is a place to trade Bitcoin, trade all the equities, commodities, your gold and silver. And with our link, you do get a special up to $5,000 instant deposit bonus. That's double the normal deposit, only available with our link. And it is instant. It's in your margin, available to trade with immediately based on your deposit. You can check their link out. It's in the video description. If you have any problems, message Lee in the Telegram, and they'll pay for you to join our trading Discord if you guys would like to come to our Discord for a fantastic community. And if you want to trade all the cryptos, guys, you already know, check out BingX. That link is in the video description as well. Both support the channel as we are not monetized because we play too many clips and musics and intros. But I like the channel better this way. YouTube monetization does not pay anything unless you have a massive, massive channel. Just FYI, in case anybody was curious. Let's go ahead and look at the Dow. The Dow, again, we have a wedge here, as you can see, lots of trend channels inside it. What are we hitting? Hitting the top of the wedge. Still closing below the top of the wedge. So the Dow's at a key level here too, 35,460. And let's zoom into the daily. I went ahead and put the pivots on here, and they are playing out just like they did on the S&P, because again, the big money just flows into these things simultaneously. So you can see you're below your ascending wedge here, 35,458. Your local high here on the Dow, worth watching because it is rip roaring. Almost set a record going back to 1897. Missed it by a day. Somebody in the Discord, one of the members said I Kramered it. I Kramered the Dow's chances by talking about the record, because that day it didn't get its 14th close, so it closed below. But the Dow at 35,701, guys, 35,701. And let's look at this again on the 1 hour. And 1 hour, again, you can see here's your local high, immediate resistance at 35.5, 35.6, and 35.7, where you made that local high. And you can see the bearish structure. You have a double top here. This could be a distribution box. If you can hold it and flip above it, you can come and try to retest these highs. So I want to talk about the S&P now. We're going to do Bitcoin next, guys. I have a lot of stuff here I want to show you, so buckle up because this might be a little bit of a video here. But you guys have heard my macro review over and over. If you notice the thumbnail title or the video title, No Soft Landing. There isn't going to be a soft landing because there's never been one in history. It doesn't mean you cannot have a rip-roaring rally. We have a 20% rally in the S&P. So Bitcoin's doubled off its 15.5 low. You can have big rallies, but my premise is the market's going to behave the way it has always behaved in history, never bottoming before a recession, not once in history. Historic, unprecedented yield curve inversion. You know, you have a historic run right now on the LEI, the leading economic index, leading economic indicators managed by the Conference Board. Michael Darda is going to put all this together for you. It is a 5-minute clip. So you can skip forward to get to more TA, but I highly suggest you watch it because it is an amazing clip, okay? He sums up my view much more succinctly than I do in a 5-minute clip. He's very calm. He's very rational. He's one of my favorite guys to follow. He's on Bloomberg and CNBC all the time. He was very bullish when he needed to be bullish, and he's very bearish because of these indicators that we talk about on this channel all the time. So without further ado, Lee, go ahead, run that clip. Guys, we'll talk about it on the other side. Highly suggest you watch it. It's very powerful information.
What's everybody missing?
Yeah, it's been quite the turnaround from where we started the year, that's for sure. I think what's happened here is simply the chase is on. So the equity market obviously is surprised to the upside this year. That, coupled with the fact that the bottom hasn't fallen out of the economy just yet, seems to be leading many economists to dramatically reduce their recession odds for the year. But I think that's a bit of a dangerous game here, simply because equity markets can run right into a business cycle peak. And in fact, we've had a few recessions where equity markets have actually peaked after the cycle peak. So if we're hanging our hat on the fact that we've had this explosive rally this year in strength and coincident and lagging indicators, I think that's highly problematic, in my opinion.
But the leading indicators have been so bad that I'm starting to wonder if the storm's just going to blow over. In other words, looking at the literal index of leading indicators, I think it's never been down more than 12 months, which I think we're down 14 months now, maybe year on year. It's never, by month 12, we're always in a recession. So something very unprecedented is happening here, where all the leading indicators have been so bad, but the recession hasn't showed up yet.
Yeah, yet. That's, I think, the key word. So the index of leading economic indicators, this peaked 18 months ago. The consensus is another fall for this past month. And so, it is getting, towards the longer end of the range. It's 18 to, I think, 20 months have been the longest lag before a recession hit. If we look at the yield curve, we've got an unprecedented inversion here, and it's deep and it's been very persistent. The 10-year to 1-year Treasury spread, which is the one that we focus on, we're 12 months into an inversion now. So typically recessions have occurred 12 to 14 months post inversion, but sometimes it's 18. We've even had a few that are closer to 2 years. So to declare the coast clear, because payroll growth has been positive this year and the equity market has rallied, I think that's a bit of a straw man argument. And with the Treasury yield curve, we're definitely getting there in terms of when we could start to see some serious trouble for the cycle. Let's see what the second half brings. If we make it through the first half of next year, then I think you're legitimately getting into territory where we can say, okay, the longest leading indicator, something has gone wrong here. But I think to be highly confident of a soft landing, simply because the equity market has rallied, payroll growth has been positive so far with this historic yield curve inversion, a historic collapse in money growth, historic tightening of lending standards. And let's not forget, the Fed's reaction function here is to get to a restrictive stance and then hold there in any configuration of the balance sheet that leads to below trend growth. So the no land actually doesn't make sense just based on what the Fed is seeking to do. They'll simply continue to tighten policy until growth weakens sufficiently. And as long as the labor market's tight, they are not going to be super confident that inflation will continue to roll over. Right or wrong, that's the reaction function.
Yeah.
And so with the equity market up here at a 20 forward multiple, I mean, we've got the Infotech index. It's led the rally this year at over a 28 forward multiple. We haven't seen that since the end of 2021, just before a more than 30% collapse in that index. So I think if we're upping the bullish bets here based on this action, and it's happened on no earnings growth, I mean, there's no increase in forward estimates from where we were last October, a dangerous place to be.
But I admire your conviction because, there's people, and I think sort of to put it less eloquently than maybe Goldman did, it's almost like they can't find a way to get to a recession at this point. We look at some of the consumer metrics, we look at housing, which has been kind of on the upswing, at least residential construction. You look at the fiscal impulse, which is getting more and more attention because so many of these fiscal projects have to happen before the end of 2024. And that seems to be kind of feeding in the construction boom that we're seeing, the investment, the infrastructure. So how do we kind of tip this economy over enough that within a quarter or two, and it looked like with claims going up a month or so ago that was starting to happen, and then they came down again.
Yeah, well, things could turn quickly. This so-called excess savings will essentially run out by the fall of this year. And so that could start to change the picture a bit. If you look at same-store sales and nominal aggregate, I mean, they're comping negative in nominal terms now year over year, and that data takes us into July. People seem to get excited over this retail sales report yesterday, but in real terms, inflation adjusted, you've got year-over-year growth down 5 months in a row, unprecedented outside of a recession. The jobless claims numbers have been volatile and have pulled back recently, but year over year, continuing claims are still up close to 30%. Again, unprecedented outside of a recession or just prior to one. So I don't think we're quite out of the woods here, but the equity market rally is simply coloring the perception that the soft landing is in the bag, and we'll see how that works out.
All right, so that was Michael Darda. And Michael Darda is awesome. But, a couple of things that he said. Let's just recap in case some people didn't understand some of these things. Leading economic indicators, the LEI index. Normally, after 12 months of decline, you're already in a recession. We're at the 14th month of decline. Now, Darda referenced the peak of the LEI, which happened 18 months ago. And typically, you're in the recession by 20 months. Okay, so 18 to 20 months after the peak of the LEI, peak cycle, you go into recession. Something that Michael Darda did not mention, which he's mentioned in other clips and other interviews that I've seen him in, was the GDI divergence, gross domestic income in this country. So GDP is still positive, but GDI has been negative the last 2 quarters. GDI is gross domestic income, GDP is spending. Now, when we had 2 negative quarters of GDP in 2022, and people were like, this is it, the recession's coming, GDI never turned negative. GDP will mean revert to GDI. So I know a lot of people are pushing out their forecast to late 2024, 2025. Like Goldman saying now, a lot of technical people I see are saying that, oh, we could have a recession in 2025. I'm telling you, the lag effect what it looks like if the recession lands at the norm that it normally does, within the next 2 months, you could see the recession. That's how quickly things can change. Something else to consider, our GDP in America was 2.4%. That'll get revised. That was an advanced reading. It could go up or down. Leading into the last several recession cycles, our GDP was 3.3%. This is what I was saying last video. We're in the soft landing right now. The question is, will it get worse? Historic, unprecedented credit tightening, historic, unprecedented rate hike cycle, historic, unprecedented year over year claims. You can go down the metrics, which is why I wanted to play you that video, because he encapsulated 80 to 90% of what I usually say. And he's somebody that is very astute with economic cycles. And that's what he focuses on as well. So I think it was a great informative information. If you guys have comments or questions, definitely leave them in the comments or questions below in the YouTube comment section, and I'll definitely reply. So one thing I want to focus on, and the reason I want to play that clip first, guys, is the volume declination you have in these assets. Okay. So just in general, you will see stronger volumes on declines because of the Minsky moment. That is panic selling. That's that expression, price rises on stairs and comes down in an escalator, right? Because everybody sells at once when panic sets in. But you can see this, and I purposely put this at the October low to segment this out for you so you could see this, okay? We've been over this before, but this is something that's really key to understanding. If you look at since the October low on the S&P, and we're focusing on the S&P, not the NASDAQ, not the Dow, because this is the broadest representation of the economy, the 500 largest companies. So you look at your volume. Okay, these are 61-day segments roughly. 2.8 million, almost 2.9. You drop down after your bottom to 2.2 million, 1.9 million, 1.1 million, and where you are now at 725,000. And you finish this box here, this segment on August 14th, coming up roughly 2 weeks away. So you're finishing this box, and you may be finishing under a million in volume. So you've had volume declination the whole way across here as price has continued to rise. Now you can keep having fewer and fewer buyers to pump up the price, but the point is this isn't going to be prolonged because more and more people are dropping out of the game. Fewer transactions are being recorded. Guys, you can see it in the YouTube space, looking at some of the biggest channels. Look how much their views are down. How many of your friends are still actively trading Bitcoin and cryptos? Big drop off. I probably had half my family trading, and now most of them are like, nah, just going to wait and see what happens. And you can see it in the volume. So, key concept, at key resistance, you will start to see tops potentially come in, which is why we were looking at this channel that I have drawn here, okay, that I showed you guys last Monday or whenever that last early week video was. The two channels here, you have a cluster of the trend line resistance here. We can add our Fibonacci here as well and look at this resistance. Your 2618, if I want to use this previous wave impulse, you got just above it is at 45.99. Price right now is at 45.86, hitting the top of the main trend line here. Okay, so this is a big point to look at in the market. Reason being, a couple of different reasons. We have a pivot point coming up, and as you guys know, I've drawn it many times. These pivots have played out beautifully for a potential change in direction. Could be a small change, like a 140 handle drop like the last pivot, or it could be an 18% drop like an earlier pivot or the prior two pivots before the last one, which are an 8.5% drop. Okay, that pivot's right here. So you're at a key inflection level with a pivot coming in. Now, the bullish case would be flipping 4,600, 45.99, flipping this, coming up, breaking out of these channels, hitting your pivot. Maybe your pivot just drops you down and you pivot out to the upside. That's the bullish case. Is it possible? It's certainly possible. What's the probabilities? I think it's more probable that you're putting in a local top, but the economy is still resilient. So this is something you should watch, especially you day traders, this level, because this is presenting an opportunity here as this builds a distribution box. You have a clearly defined low here at the moment, 45.29. Remember, I had that key support at 45.26. You have a clearly defined local high, and you have a key pivot coming up. So above 4,600, these are potential areas to get trades for some of these movements for day traders that want to go into that 1 hour, 15 minute. And also just for the pivot people that want to swing trade and see what happens on this pivot, this could be a very, very key pivot. So if you look at the money flow, you still have bearish divergence. Momentum's still good. This is your volume ratio. So you have more buying than selling, but you can see a clear drop off here in the buying. So again, just very toppish. You have Apple and you have Amazon reporting this week as well. Apple and Amazon are 17%. Those two companies are 17% of the NASDAQ. Lots of things to consider. What I'm looking at, key resistance 4,600. My next key level above it is 46.47. Let's call it 46.50. And obviously, if you build a bearish structure, a double top or something here in a larger time frame, that is something that is highly tradable. You can see this on the 1 hour time frame as well. 45.92, simple fib retracement, came up, tapped it a couple times, and price is struggling in this range. And this is the fear, the flash sell from the fear of the Central Bank of Japan loosening their yield curve control, which they did, but not by a whole lot. So you had to rebound from that. And now you built this bearish structure here in the 1 hour time frame. Could be an accumulation box, could be putting in a double top. So again, key resistance area, guys. I view the market in levels. If you look for breakouts, you can trade above it. If you look for breakdowns, you can also get your shorts in, okay? But key inflection point in the S&P, which translates to key inflection points across the market. If you look at the NASDAQ here, again, you can just do a simple fib retracement here, and you tap the 786. So this again is forming a dragon pattern, a double top, an ABC, can have many different names. It all means the same thing. 15,818. You have to flip this, come up above 15,937 and break out to the upside, or you could be building a distribution box. It's still early. It's the daily time frame, but you can see the structure is here as well. 786 key retracement levels. And whenever I look at double tops coming in the market, one way I like to trade them, if I do believe the trend is down and they will break down, you can always use your local high. And again, take your short at your 786, which would be 15,818, with this as your stop loss at your local high, 15,937. This is a dynamic stop loss. This is not based on a percentage. And ATR is dynamic as well, but that's going to give you a much broader reading. But this tells you if you break this and come up, well, you're going to be out of that trade. So it's just one way to look at it, but everybody should trade with their own confluence of what they see. Now, a couple other things we can do here. Fibs, again, hit the key retracement on the NASDAQ. And if we look at this as well, let's look at our wave projection here, BCD, 2618, 15,845. We hit that as well. So again, topping, it looks like here some topping action, looks very toppy. If we look at the MFI, clear bearish divergence now going on for many days since the middle of June, June 16th, okay? Clear bearish divergence, momentum divergence as well. As price has risen, momentum has gone down. So area to watch here, very, very key to watch on the NASDAQ. Let's go and jump over to Bitcoin. If you guys are staying along for this video, I hope you enjoy it. I know it's long, but again, that Michael Darda video I think is just so important because it encapsulates everything I think that's really worthy of watching here in the marketplace and discussing the prior history of prior recessions as well. 63% pump. This is our market geometry bullish Bitcoin case. If Bitcoin wants to get bullish with the market, the S&P breaks out above 4,600 and wants to keep going, pursue a new all-time high. I'm looking at Bitcoin going 39,791 if that's the case for the S&P. If it hits a lower target, 34,770, and again, if it just starts faltering, let's look at this on the daily time frame. If it starts faltering, then it's printing this massive double top, as you can see here, okay? Where are the key levels for this? We've been over this, but look, this is a normal retracement, the 382. You kissed it beautifully here at 28,875. Where I'm worried is if you lose the 618 at 27,301. You lose the 618 at 27,301, this turns into a potential reversal. And if you zoom out and look at this on the daily, if you reverse, where are you going to? Your neckline of your double top, 24 25.2-ish, okay? So Bitcoin, we've been actively trading this in our room as well. We shorted up here, again up here, and we long down here. And now we've had some different little scalps in and out of here, but you get the stepping pattern. But again, totally normal before this pump. You can see some sell off, but you want to make sure the 27,301 holds. Where am I more bullish on Bitcoin? Breaking 31.5. Breaking 31.5, either retesting it and pumping out or just continually pumping. That's where I'm more bullish. And you're at 29,219. But again, I'm doing all my activities with Bitcoin in confluence of what I see happening in the marketplace. If you look at gold, it's still stuck between the same two fibs, 1959, 1977. Key resistance 618 at 2000. And again, you have your head and shoulders pattern or a disjointed double top, whatever you want to look at here. Gold and silver, I do believe, once again, guys, will move down with the markets when the markets decide to roll. Why? Because that's what they do historically. Gold went down 34% in the GFC, and silver crashed 61%. Both are Fibonacci numbers expressed as percentages, okay? So that's something to consider as well. So just watch that. You can always overlay your S&P on top of this. You can see exactly what I'm talking about as we've done in previous videos. Key resistance 25 spot 27 on silver. Pumping back up towards it. That was your 786 retracement. And again, you can see your head and shoulders type pattern. You have a X5 Fibonacci pattern in here as well. So key resistance to watch, and you can see your support levels beneath you, 24 spot 59, 23 spot 75, and a key support here basically is 22 spot 29. You sweep that, you definitely have more downside coming. Tesla is hung up at 268. It's at 267 spot 84. Looking to see if Tesla can come up and fill this gap up here at 289 before it decides to either go up or go down. And this will happen in confluence with the markets. Really struggling here at 268, putting in a cluster of candles as you can see. And First Solar, we were active in trading this, had beautiful shorts on First Solar up here in the 220s, all the way down to the 170s. First Solar came back up again to 230, shorted First Solar again, it rolled back down again, and now it's back at the median line here of our channel, or it was, hit key resistance at 223. 1618 at 198.13 is the next key level for me. It's in the middle. It's at 208. Not interested in doing anything here. Ping-ponging between here, more interest, but that's First Solar, guys. And let's look at NVIDIA. Had some requests for this as well. Again, you have money flow is right at the median line. Looking at your structures here, just through a quick trend channel here on the daily time frame. I mean, you're throwing all kinds of bearish patterns here as well. You have a dragon pattern, which is essentially a double top, as you can see. 50% retracement ratio. You pumped up just above the 786 to 829, and price is kind of going sideways right here. NVIDIA is stuck between 465 and 472. If your momentum, if your money flow starts going bearish, you could see this roll over, okay? And at a minimum, retest the base of the channel down here at 447 or 440. But if you come back down and you hold it again, then you just have one of these actions where you're waving back up again, okay? And so you could see something like that as well. Key support or key resistance above you is the 480 level that you hit as your high, then 491, and then 505. This is something I would not chase. It's already had a massive run, and this is why you're seeing a lot of this looks to be, building a double top or a distribution box. I wouldn't chase something like this here. I would wait on all of this stuff because when the recession comes, everything will be much cheaper because the market has never put in a low before a recession in history, guys. So everything will be a lot cheaper. Looking at the Russell pumped up 2002, hit it on the dollar, and you're at 1997 right now. So Russell doing the same thing. You have some type of distribution box, potentially accumulation. If it was to be accumulation and was to break out of this range, then you want to watch 2055. If it starts breaking down, you want to watch 1928, 1900. You sweep 1900, you're going back to this type of the Wyckoff at 1813 in that range. Like obviously, this is a small caps. There's a lot of regional banks and stuff in here. This can move independently, but in general. So goes the broader market. So goes the Russell. So goes many things, if not everything. Okay. Let's go ahead and look at the JPY. JPY, the market got a little bit more bullish. The key levels I'm watching here. The key levels I'm watching here are 33,633, which is our final wave projection that goes back multiple years, I think 2018. And of course, we hit it almost to the dollar. And now we sold off some, and the JPY or the NIC, the JP 225 is starting to move again a little bit. And if we want to just get a closer Fibonacci resistance here as well. We just pumped above the 786 at 33,000. We're at 33,168. So my one fib lines up really closely with the 2618, so 33.5, 33.6. Want to watch that range and see how this behaves when it gets up there. If it does break out to the upside, then you could be looking at something more along the lines of 34,765 or 34K. Let's look at the DAX real quick. I threw the DAX in a channel as well. As you can see, it's in the middle of the channel, but of note, that was your all-time high, your new, once again, all-time high. Okay, I think we went over that last video, but you can see this could easily come up to 16,677 if it so decides. It's at 16,450, but you got a lot of different resistance here from these Fibonacci levels. If we want to look at a different level, we can go to the prior wave impulse here as well. Going to throw this on here, and you can see you hit your 1618 at 16,446. Look at that, 16,446. You're just on top of it by six or 8 points right now. So this was a key level as well. Again, you have a doji forming here. We'll see how this closes out on the candle. But if everything is getting toppy, you're going to see the European indices get toppy as well. And not a bad way to top out on a new all-time high. Watch the structure, how it forms, especially on smaller time frames. 16,446, key level of resistance. And then beneath you, 15,750, key levels of support structure as well. Looking at the French 40, again, our harmonic cycle wave projection here had 76.58, as you can see. And if we take the French 40 and we want to look at this, and let's see if we can get a different projection here. We had a direct hit just above it. Obviously got above the 1618. Didn't quite get to the 2058 based on that wave projection. Let's see if we can find one that lines up really, really beautifully here with the French 40. This is a 3-day chart. Let's go closer in here and see if we can find a better projection. Here we go. So the French 40, looking at this, again, looking at a prior wave projection on the way up, look what you bounced right off of. 1272 at 75.30, 75.30. And the price hit that 75.27. Your 1618 from this tighter projection lines up perfectly with the 1618 from the projection of the beginning of the cycle, beginning of the bull run at 70. I can't even see it. It's stacked right on top of each other, 76.58. So you could see a little bit more upside, but again, we'll see if this starts getting toppy. This didn't move up as much as the DAX did. Obviously, the French 40 made its all-time high over here. All right, guys, that's it for this video. Like, subscribe, ask your questions, make your comments. I'll go through, as always, and answer as many as I can. Thanks for hanging around until the end, and I'll see you guys Thursday. Take care, everybody.